Market recap. Dow hits yearly high, sector rotation signals December shift. The Dow Jones surged to a new high for the year today, but the SPY added a more muted 0.4% to 4,167 points on 80. Major indexes were mixed today. Of the 11 sectors, 8 ended in the green, led by healthcare. Commodities are mostly lower as crude oil reverses hard from $79 per barrel this morning to $76 per barrel this afternoon. Energy remains in the middle of the sector leaderboard, despite the big reversal in crude. Today is all about value stocks as healthcare, materials, financials, and industrials show leadership. Meanwhile, the three aggressive sectors, communication services, consumer discretionary, and technology, are the only three in negative territory. The typical December rotation from growth to value stocks may be starting right before our very eyes. The Nasdaq did not play ball and was about 0.2% lower at 14,426.22 as traders took some profits in the stocks that have led to the November comeback. The Russell 2000 was also positive, up 0.29%. The Dow closed out November with an 8.9% gain, breaking its 3-month losing streak. The SPY rose 8.9% in November while the Nasdaq advanced 10.7%. Both averages had their best monthly performance since July 2022 and were trading about 1% away from their respective 2023 highs. This has been driven by the furious decline in the 10-year Treasury yield, which hurt risk appetites by rising above 5% last month. These declining yields and cooling inflation data have been helping to boost sentiment for equities. The 10-year yield ticked just a bit higher today to 4.34%. Technology shares were far and away the big winners in November, but investors took some of those bets off the table as the month ended. Traders have now become optimistic that the Fed's rate hiking cycle is over, with Fed funds futures pricing reflecting a chance the central bank could cut rates as early as next spring. Keep in mind that the Nasdaq continues to face potential resistance in the 14,949 to 14,046 zone. It wouldn't be surprising for the tech-heavy index to extend its recent breather around these levels. That would give leading stocks more time to consolidate before another potential move higher. Meanwhile, we see more and more leading stocks that are breaking out. We are also seeing numerous off-the-bottom trades in beaten-down biotech and technology names. We still lack one more index to confirm that we are going to run higher. We now want to see IWM move with conviction above its 200-day line tomorrow and close above it on a weekly basis. That should further confirm that the market should go higher from here into the end of the year. Turning to active movers, Salesforce was the top percentage gainer on both the SPY and the Dow, as investors and analysts cheered the cloud-based software firm's quarterly results. Thanks for watching.